Hello, friends. So today, in one of the Ask the Expert show, which is our valuable show, where we come up with different products which are very interesting for our clients. So one of the such product is Bayfort, where a client can invest in the global equities and a lower ticket size of minimum 10 lakh. There are few gradation where the people can invest on the higher ticket size also, which will take over in the Q&A session. But before more about this product, I would like to introduce Mr. Ketul Chapra, who is the founder of Bayfort. And prior to that, Bayfort, he was heading the equity research at Mahindra Manulife Mutual Fund. And before joining Mahindra Manulife Mutual Fund, he was also a fund manager with Franklin Templeton Global Infrastructure Fund, based out of New York City, where he was researched and toured various regions like South America, Austria, China, and generating an alpha generating stocks for the fund. He has also achieved a 4-star rating from Morningstar for the flagship fund for all the period since the inception of 12 years with Franklin Mutual Funds. He's have hundreds of funds offered by Franklin. Prior to that, he was also a founding member of Tudor Pingsting Long Short Equity Hedge Fund in New York City, focusing on US equities. The fund beat CSHF index for all the periods. In his pre-MBA position, Chapra also worked with senior research engineer, wireless terminal laboratory at Samsung in Dallas, and holds a multiple patents for innovations in mobile devices. Mr. Chapra is also a chartered financial analyst and a bachelor's degree from University of Pune and Masters of Science from Rochester Institute of Technology and MBA from University of Texas at Austin. So very strong pedigree, and we would delighted to have you in our show. And you please throw some light for our clients on the Bayfort Fund, which will help them to diversify their portfolio in the global equities as well. Yeah.
Yes. So thanks for the introduction, Vijay. And yeah, as far as the Bayfort Global Leaders portfolio is concerned, there are three important things to remember for this portfolio. One is we invest only in disruptive and innovative companies globally. So why disruptive and innovative? Because if you are an Indian investor, you have already invested through mutual funds or direct equity in, say, banking, insurance, automobile, steel, cement, metals, oil and gas, infrastructure, manufacturing. All of this you already have in your portfolio. And frankly speaking, these sectors are better in India. You should not invest in the US for these sectors or in most of the countries around the world because India has organic growth in these sectors while the developed countries don't have that. So we said if I were investing my own money, I would not invest in these sectors. So then the question was that where did I invest my own money in the US when I was in the US? And what is the specialty of the US? And so that came to disruptive and innovative companies that are making world changing products, and those companies have also given returns which are almost 2 to 2.5x of the Nifty 50 compared to the Indian Nifty 50, large cap to large cap comparison.
Yeah.
And over the last 20 years, it's not 1 to 5. So those companies have a very good track record of high returns. They are also very well managed, and those sectors are not available in India. So you will not have that in your Indian portfolio at all. So it's a perfect complement for your existing large cap portfolio. It's just disruptive and innovative companies. And currently, those sectors comprise of AI, robotics, drones, biotech, medtech, blockchain, e-commerce, digital payments, defense companies, aerospace companies. So all these sectors are not available in India, and we invest only in those sectors. That's point number one. The second important point is we invest only in large caps. 90% of the portfolio or more will always be in large cap stocks, $10 billion and above in market cap. Because as opposed to India, in the US for the last 20 years, large caps have given better returns than small and mid caps. So then there was no point in going into small and mid caps and with higher risk and expecting lower returns.
Right.
So only large cap, that's the second point. And the third important point is we invest up to 30% of our portfolio outside of the US as well. So it's not purely US. It includes the sectors that you have in like Korea, Taiwan, Europe, Israel. We have Asia Pacific in our portfolio. We have Latin America, so Brazil, Mexico, Argentina. So it is a global portfolio with up to 30% that can be invested outside US. So again, I'll rehash 3 points: disruptive and innovative companies, large cap, and 30% non-US. So I'll pause over here. I think that gives a very good
Yeah.
starting point.
Right. And moreover, it will be a complement for the Indian investor who has already invested usually in the Indian market in different sectors, and the sectors which they have invested in India, they are already doing well, and it will complement their overall portfolio. Which the sectors which are not in India, which are highly appreciable in US market, they are investing in that. So it
Perfect.
actually complement the portfolio, and
Very
moreover, 70% is in the US and 30% in the other multi regions.
correct.
Right. So, what would be the minimum ticket size, and can you just elaborate on those part? And what is the maximum they can invest in this?
So there is no limit to the maximum amount that one can invest. RBI stipulates that per person, the maximum amount you can invest outside of India per year is 2.4 crores or 250,000 US dollars. So
Okay.
that is the RBI stipulation, and that's the maximum you can invest per PAN card per person, about
Okay.
2.4 crore rupees per year,
Mhm.
per financial year.
Mhm.
Minimum ticket size is 10 lakh rupees, so you can invest anywhere between 10 lakhs to 2.4 crores per year.
Okay. So minimum is 10 lakh and maximum is 2 lakh 50,000 US dollar per PAN
Correct,
card per year.
correct.
ठीक है. And will be actively managed by you, or it will be have a fund structure? Can you just elaborate on the fund structure?
Yes. So it is actively managed by me only. I am the fund manager. We have a research team as well, but
Mhm.
I am the final fund manager for the portfolio. The structure of it is these are called separately managed accounts in the US, and we offer it through Interactive Brokers. Interactive Brokers is the platform that is used for execution. So all the clients have to open an account with Interactive Brokers. It's an international brokerage come demat account. And from an understanding perspective, it works
Mhm.
conceptually exactly like a PMS, like a global PMS. So
Okay.
PMS in America are called separately managed accounts.
Mhm.
So just like a PMS, every client has to open an international brokerage account and then transfer money to that brokerage account directly from their bank account in India. Any savings bank account works.
Mhm.
So and your bank will convert the INR to US dollars. So on day one, all your money is converted by your Indian bank only to US dollars, and the
Okay.
money that is there in your international brokerage account is in US dollars. And once the money is there, we replicate or buy our model portfolio into the client account. So that way, the client has the exact same portfolio that the rest of our clients have. The new client has the exact same portfolio.
And the
And
buying and selling totally depends upon your fund
correct,
management goal.
correct. We regularly, it could be once a week, once in 2 weeks, we will do the buying and selling as and when required. The client doesn't need to do anything.
ठीक है. Does a client has a view on the portfolio on a real time basis?
Yes, the client has their own username and password. It is their own brokerage account. It's like having your own Zerodha account or a Grow account or something, right? It's
Okay.
your own brokerage account. You will have the regular access that you have online through an app on your phone. Everything just like a regular brokerage account.
Okay. And whenever there is an exit or there's an exit load, minimum lock-in period, can you just elaborate on that?
Yeah, there is no exit load, there is no entry load, there is no minimum lock-in period, there is no custodian fee, no account fees, no any other sort of fees at all.
Okay.
The only fee that we charge is our asset management fees, and that's the only fee the client will have, and that includes everything. There is no separate small charges here and there. So
Mhm.
one fee, and that includes all the charges.
ठीक है. And during repatriation, when the money taken out, so will they get in dollar only, or it will be converted again back to INR?
Yes. So The brokerage account will send it in dollars, but when your bank receives it, they will convert it into Indian rupees because your bank account is in Indian rupees. So your bank, whichever bank you have, they
Mhm.
will do the conversion for you.
So any nationalized bank, we can transfer the fund, right?
Any nationalized, any large private, NDFC, ICICI, Kotak, Axis, SBI, all these banks are good. Any large bank who has a foreign forex desk will work.
Okay. From how long the fund is active now?
4 years now. July 1st, 2022 is when we started.
Oh, okay. I'm taking up the questions from the client's perspective.
Sure, sure.
Yeah. Uh, what is the, because the fund is actively for last 4 years. So what is the minimum that it is just an expectation. It's not the number or committee. What is the realistic expectation from this kind of a fund in dollar
So,
terms?
yeah, so while this is the equity market, so obviously there are no guarantees in this, but
Mhm.
we do try to achieve 20 to 25% returns, and that's how we select the stocks in US
Mhm.
dollar terms. And I can share a slide which will show you our historical returns. So that will give you an idea about how we have done so far. So this is our historical returns that we have generated so far. The
Mhm.
top line is our portfolio, Bayford Capital Global Leaders. S&P 500 is the US large cap index. That's the next
Mhm.
one. And that's our benchmark. And Nifty 50 is just for comparison purposes for Indian investors. We don't invest in India, so we should not be compared to the Nifty
Mhm.
50. But that gives you an idea about how good a strategy that we are offering and over a long period. So since inception is actually 4 years.
Mhm.
So over 4 years, we have generated about 32% per year
Mhm.
compounded returns, right? So
In
that gives
all
you
the time frame, it shows alpha to the benchmark S&P
exact
500. Yeah.
exactly. So I do feel that investing outside of India is a no-brainer, and there are multiple reasons. So we get this question frequently that why invest outside India? And as I said, India is a good market. We are not saying you should sell your Indian portfolio and invest outside of India. Not
It's
100%.
just a complement
Just a
portfolio to.
complementary small part you should invest. And
Mhm.
the reason is because of this chart. I will this Most of the people are surprised when they see this chart. So this is the return of the S&P 500, which is our index for the last since the last recession, 2009. So our fund
Mhm.
was there only for 4 years, but the index has been around forever, right? So we are
Right.
comparing index to index. S&P 500 is the orange line over there, and the blue line is the Nifty 50.
Okay.
So that gives you an idea how good the returns have been for the S&P 500 for the last say 17 years. It's not one,
Mhm.
two, five, right? You're going all the way back to last recession. And this is the reason why we feel that everybody should invest outside of India, a small part of their portfolio, and that's a no-brainer.
Okay.
That's an easy decision. Now, whether you want to
It's
invest,
clearly visible that the S&P index is given a far much better return than Nifty 50.
correct, correct. So that is a no-brainer investing outside. Now, whether you want to invest with us or somebody else is what we can help answer fairly quickly.
Mhm. Yeah, not talking point is like on the taxation part. So if a investor is investing from India through interactive brokers and which is managed by Bayford, so how the taxation will work out in this?
Yes. So any capital, first of all, US does not charge taxes or TDS or any filing to foreign residents. So
Mhm.
there is no filing, no TDS, no taxes to be paid in the US. So you will get 100% of your money back. Okay.
Mhm.
Whatever you earned. Now, for capital gains in India, you have to pay taxes on foreign assets and foreign income as an Indian resident. And
Mhm.
that is after 2 years, you pay LTCG, which is 12.5%. And any capital gains below 2 years, it goes into your income tax bracket. It's considered regular income.
Okay, okay. Anything less than 2 years based on the income bracket.
Yes.
Okay. So person with a higher tax slab will gain up to 30 to 39%, right?
Yes, in the any short-term capital gains that are generated. But we don't trade that frequently. So about 80 to 85% of our gains are long-term.
Mm-hmm.
The short-term gains generated are a small portion of the total return. So that hopefully should not be a problem for most of the investors.
Okay. The taxation, as I understood, it will be less than 2 years. This, but it is treated like a PMS where based on the transactions happened in the portfolio, long term and short term is calculated each year, and the client has to pay, or it would be like a mutual fund where only when you take a redemption, only then you need to pay long and short term.
No, it is treated like a PMS because, as I said, it works fairly close to a PMS. So every transaction that is done in the client account at the end of the Indian financial year, we will send a tax package which you have to share with your chartered accountant,
Mhm.
and it will have all the details for short-term gains, long-term gains, and you'll be able to file your tax every year. But you do have to disclose this and file for capital gains generated from this account every year.
ठीक, ठीक. This is the only thing, the innovation, or there's also shift in the, suppose now, just to give an example, SpaceX has launched, okay, which is may also considered as part of an innovation. So will that be all the stocks be considered in the portfolio?
Absolutely. We have closely followed SpaceX and Rocket Labs, and there are a bunch of other rocket companies, space exploration companies. We have followed all of them. We have also invested in one aerospace company. They supply parts for space exploration. They do not make like space satellites and all that, but they supply parts to the industry. So we are
Okay.
already invested in it. Now, SpaceX, it did not fit our valuation parameters. It's a great company, a phenomenal company, but the valuation is also phenomenal.
Hmm.
And that's why we have not invested in SpaceX. But rest assured, we are following it actively. At some point in time, if it falls within our valuation framework, we can and we will own it in our portfolio.
Uh, that's good. And it was a nice session. I think our clients how would understand, this product will actually complement their portfolio, where they are, in the US and the multi regions with the proper innovation theme. In India, I think there is no product. In fact, you will find very few companies which are innovative. So most of the businesses are traditional and tech based, but the innovation, as I speak, mostly the companies are from the US and the global players only. So here, actually, this will complement their portfolio.
Very
And
good.
it was very nice to have you, sir, to have a detailed explanation on all this product, on the all the aspect, from the taxes to onboarding to the importance of the product. So I'm very much thankful for to you, sir, and we will just try to get the maximum participation and make our clients know about this product.
Wonderful. Thank you. Thank you, Vijay,
Thank
for
you, sir.
having
Thank you,
me
sir,
on the
for your
webinar. Thank you. Have a nice evening. Bye bye.
bye, sir. Thank